Hello, everyone. Welcome to another webinar by Smartkarma. I'm Michael Tegos. Today, I'm excited to welcome healthcare analyst Tina Banerjee. In this session, she will discuss the positioning of Asian healthcare companies for growth and outline her top picks in the sector. Tina is an equity research analyst with 15 plus years of experience with an interest in fundamentally strong global healthcare companies. She helps investors find future winners and grow their wealth by focusing on the strength and potential of healthcare business models. Her initiating coverage reports and pitches help investors know what, why, and when to buy. She also provides a view on the broader healthcare sector through periodic thematic reports. Before we begin, some of our standard housekeeping. As always, feel free to send in any questions you might have for our speaker using the Q&A button on your Zoom app. We will do our best to get to them at the end of the session. And please do not reshare the contents of this webinar without our express permission. The recording of the webinar will be available after the session, as always. With that, Tina, let me welcome you to the webinar. Thank you very much for joining us today. The floor is yours.
Thanks, Michael, for having me on this podium. Good afternoon, all. So today I'm going to discuss on the growth opportunities in the Asia healthcare sector. So I have outlined the presentation in 3 sections. First, I will discuss about the secular tailwind, which will be the long-term growth driver for the sector. Then I will outline some near-term opportunities, and lastly, I will highlight the best stocks to buy for now. So with that, let's move on to the presentation. Asian healthcare sector has 3 major long-term growth drivers. 1, favorable demographics. 2nd, increased disease burden. And 3rd is inadequate healthcare infrastructure. So the total healthcare spend in Asia is estimated to more than double from 2017 to 2024 to reach $4 trillion, representing an average annual growth of 12%, which outpaces the estimated global healthcare market growth of just 5%. Asia is world's largest and most populous continent, with current population of 4.7 billion. This is equivalent to almost 60% of the total world population. Although the population growth rate has declined to 0.82% currently from nearly 2% through 1990, population is only expected to decline as early as in 2060. So Asia will be home to 500 million people aged 65 and older by 2025. This population will make up approximately 60% of global growth in this age group, compared with just 22% from EMEA and 18% from Americas. Aging has already started. As we can see from this figure, the median age of Asian population has increased to 32 years in 2020 from 23 years in 1990. And during this time frame, the fertility rate of Asian population has declined from 3.5 to 2.15. The region faces a dual challenge of rising non-communicable diseases or NCD incidence and persistently high infectious disease incidence. Most of the Asian countries have become wealthier over the last 30 years. Thus, increasing air pollution, population expansion, and aging have altered the distribution of the disease burden, with NCDs rising in prevalence alongside a still high infectious disease burden of tuberculosis, HIV, malaria, hepatitis, and diarrhea. Oncology, cardiovascular diseases, diabetes, and chronic respiratory diseases are the top NCDs in the region, with the underlying risks being urbanization, globalization, sedentary lifestyle, obesity, and hypertension. The highest number of deaths globally due to NCDs occur in the Western Pacific, followed by Southeast Asia. Cardiovascular diseases, or CVD, were the leading cause of death in Asia in 2019, causing 10.8 million deaths, which were approximately 35% of the total deaths in Asia. The growing crude CVD mortality rates indicate the increasing burden of CVD in Asian populations, and the fall in age standardized CVD mortality implies that the trend in the crude mortality was driven mainly by demographic changes. China and India have one of the highest national prevalence of diabetes among the Asian countries and around 10%. China and India combined will have almost 500 million diabetics by 2030. An estimated 113 and 238 million people will be diagnosed by diabetes in Southeast Asia and Western Pacific respectively. Asia accounted for 49% of total estimated number of new cases of cancers globally in 2020. China alone accounted for 50% of new cancer cases and cancer deaths in the region. Lung, breast, and colorectal cancers are the most common in this region, in addition to liver and stomach cancers. Many of the Asian countries are underinvested in terms of bed capacities and physicians, which has been highly exposed by the COVID-19 pandemic. They have lower per capita healthcare expenditure and spends lower percentage of GDP on healthcare than Western countries. All these factors will necessitate a rise in healthcare spend, which will be more inclined toward chronic care management. Now, let's see the near-term opportunities. We can broadly divide the current opportunities as COVID-related opportunities and non-COVID or recovery-related opportunities. Many of the Asian countries, including China, are seeing surging daily new cases of COVID. So the COVID-related opportunities are still relevant. WHO has outlined 3 most likely scenarios of COVID-19 in 2022. The most likely scenario is that the COVID-19 virus continues to evolve, but the severity of the disease it causes reduces over time. However, the agency also cautioned that periodic spikes in cases and deaths may occur as the immunity fades, which may require periodic boosting for vulnerable populations. Talking about the other 2 scenarios, the agency said either less severe variants will emerge and boosters or new formulations of vaccines will not be necessary, or a more infectious variant will emerge and protection from prior vaccination or infection will fade rapidly. So 2 of these 3 scenarios will call for the continuing demand for COVID therapeutics, vaccines, COVID testing, and R&D. On the recovery side, with huge pent-up demand for elective surgeries, hospitals and medical devices will be the major beneficiaries. Lower COVID cases will spur more people to visit their physicians, thereby boosting the non-COVID diagnostics, especially oncology. With the resumption of in-person travel, new launch of biopharma or biosimilars will also see a boost. With the increasing demand from both the local as well as Western markets, outsourcing companies have started seeing their non-COVID backlog surging to new highs. Thus far, 2022 remained hard for the investors. Inflation worries, Fed rate hike, Russia-Ukraine war, global energy crisis, decelerating global growth rate, sporadic surge in new COVID cases, and emergence of new variant are some of the near-term overhangs on the global market. So does that mean that as an investor you should lose money? The answer is no. You just have to be picky in terms of identifying right investment idea. Companies with diversified revenue stream with visibility beyond COVID and strong underlying demand for its products and services will continue to see multiple expansion. Moreover, many stocks remained resilient to the recent global sell-off due to their strong balance sheets and underlying growth stories, which offer pockets of opportunity for the investors. I will now discuss 5 of my top picks. So my first pick is Apollo Hospitals. This is $8.5 billion market cap, Asia's largest integrated healthcare service provider with 10,033 beds across 71 hospitals. Three main growth drivers for this company are business recovery, macro tailwind, and digital initiative. The company's 9 months revenue has already exceeded that of full year FY21. All other operating metrics improved versus FY21 and are to their respective pre-COVID levels. Indian hospitals are continuing to expand aggressively. With low penetration, India is an attractive market, still offering rooms for growth. Indian hospitals outperformed their Thailand and Singapore peers due to their less dependency on international patients. Apollo added 14 new hospitals with 2,800 beds in the last few years with $490 million of capex. New hospitals will contribute meaningfully to the EBITDA over the next 3 to 4 years. Apollo 24/7, its digital initiative, is the future growth engine. It aims to achieve 100 million registered users in 5 years with a revenue potential of $2.3 billion and significant contribution to EBITDA. It aims to expand the market share to 30% from 7% now in the next 5 years. Apollo has the largest digital healthcare platform among its listed Indian peers, and its market leadership positioning and pan-India presence. Apollo is well positioned to accelerate its growth trajectory. My next idea is Cochlear Limited. This is $11 billion market cap, global leader in implantable hearing devices with a market share of more than 60%. Two major reasons why I like this company are large and under-penetrated addressable market and second, attractive business model. According to WHO, 60 million people globally experience severe or higher hearing loss. Thus far, less than 5% of the people that could benefit from the implantable hearing solution have received one, so leaving immense growth potential. Adults and seniors in the developed markets provide the biggest opportunity for cochlear with an addressable patient population of more than 6 million. The penetration rates are currently very low at around 3%. So, despite the ongoing disruption to elective surgeries caused by COVID, I am confident of the resilience of Cochlear's hearing implant business over the long term. The strength of his business is depicted by a massive 30% hearing implant volume growth reported during H1 in the emerging markets as the region was less affected by the Omicron. I expect the company to replicate similar recovery performance in its major markets of the US and Europe in H2 following a COVID-impacted H1. Thus far, the company has sold more than 650,000 implantable devices in over 180 countries. Servicing of the expanding recipient base is becoming a sticky recurring income stream for Cochlear. In H1, service revenue accounted for 31% of total revenue, that is up from 29% in the year-ago period and grew 19%. With its ability to deliver superior outcomes to hearing aids for indicated patients and expanding reimbursement for hearing implants, Cochlear has the potential to address long-term growth opportunity. Third idea is Gland Pharma. This is $7 billion market cap, pure play on B2B generic injectables. Gland Pharma remained resilient to the pandemic due to its B2B business model and niche focus on injectables, which have very high entry barriers. Around 40% of the overall drug shortages in the US are in the injectables category, thereby making it as an attractive market for Gland Pharma. Among the current injectable shortages, the product relevant to Gland Pharma have an annual revenue opportunity of $500 million to which is almost equivalent to Gland Pharma's total revenue in FY21. In Q3, the company registered a 23% revenue growth in the US, a trend which is expected to continue. The company is also expanding beyond US in MENA, LATAM, and APAC regions, where the revenue is growing by more than 60%. Gland Pharma's near-term focus remains on establishing a strong portfolio of complex generics injectables, which will further sharpen its competitive edge. Gland is also a contract manufacturer of Russia's Sputnik vaccines. Going forward, 70 to 80% of the vaccine manufacturing capacity can be utilized to develop biosimilar capacity, and the company is exploring partnership with many pharmaceutical companies to enter into the biosimilar CDMO space, and this initiative will call for re-rating of the stock. Next idea is Olympus. This is $24 billion market cap, global market leader in gastrointestinal or GI endoscopic equipment with 70% market share. Olympus is transforming itself to become a pure play global medical devices company. After a decline due to the pandemic, medical business started recovery in H2 FY21, driven by the recovery in the elective procedure levels. Its medical business is now back to pre-pandemic level and is well positioned to reach new high in FY22. Olympus aims to become leader in therapeutic areas of GI, urology, and respiratory, together having a huge addressable market opportunity of nearly 1 billion yen. Global GI endoscopic equipment market is expected to have a CAGR of 4 to 6% during FY21 to 24, and Olympus is expected to outpace the market due to its dominant positioning in fast-growing Asia market and superior imaging technology. In 2020, Olympus has launched its most advanced endoscopy system to date, that is AVIS X1, the first new model in about 8 years in Europe, Japan, and some parts of Asia. The company aims to launch this model in the US in FY23, followed by China. Olympus estimates 70,000 unit potential for replacing the previous models by AVIS X1. The ratio of AVIS X1 to GI endoscopy cells also increased to 19% in H1 FY22 from just 11% in FY21. Last year, Olympus has forayed into fast-growing single-use endoscopes. Single-use market is a limited competition with just 3 major players with high growth potential. As single-use endoscopes is becoming a relevant option for many therapeutic areas, the market for single-use endoscopes is expected to have a CAGR of 15 to 18% between 2020 and 2030. Overall, Olympus is targeting 5 to 6% annual revenue growth and an operating profit margin of more than 20% by FY23, that is up from 11% in FY21. During FY20 to 23, EPS is expected to have a CAGR of more than 25%. The last but not the least idea is Samsung Biologics. That is $48 billion market cap, world's largest fully integrated contract manufacturing company or CMO with a capacity of 360,000 liters. The company's manufacturing capacity accounts for 23% of global CMO capacity. Samsung Biologics is actually both a COVID and non-COVID player. On the COVID side, during the pandemic, the company has secured contracts from 5 global pharmaceutical companies to manufacture their COVID-19 drugs and vaccines, including fill and finish contract for Moderna's mRNA vaccines and manufacturing contract of AstraZeneca's COVID-19 long-acting antibody combination. Despite being a relatively recent entrant, Samsung Biologics has the potential to access leading pharmaceutical companies worldwide with Samsung's brand image and full support of Samsung Group. Samsung Biologics ended 2021 with a backlog of $7.5 billion thanks to additional contract with many global multinational companies. These orders are generally composed of a long-term contract for 5 to 10 years, thereby entailing revenue visibility. Samsung Biologics is completing the construction of Plant 4 with 256,000 liter capacity and planning to start the construction of another new facility. Acquisition of full ownership in Samsung Bioepis joint venture is expected to boost earnings growth of Samsung Biologics on a consolidated basis, fully capitalizing on Samsung Bioepis growth outlook. Samsung Bioepis has successfully launched 5 biosimilars globally. Additionally, one product is about to release in the market and 4 biosimilars are in phase 3 clinical trial targeting new therapeutic areas. Overall, Samsung Biologics, with its three-pronged growth strategy of aggressive capacity expansion, enhancing portfolio diversification, and expanding facilities overseas, is well positioned for multi-year growth. That's all from my side, and I'll be happy if you have any question for me. Over to you, Michael.
Thank you very much for this, Tina. Very concise and interesting presentation. As Tina mentioned, if you have any questions, you can send them in now through the Q&A button on your Zoom app. Tina, this was very enlightening, and thank you for sharing. Do you have any take on China pharma companies, as it seems that they are also on a very promising path at the moment?
Yeah, China definitely long-term growth drivers are there. Their innovation ability, many companies are there. They are also trying to listing in the US market. There are a huge domestic market is also there. Government initiatives are also there. So long-term growth story definitely that is there. But I'm not very bullish on the near-term perspective. First of all, the US-China tension is also there. First of one reason is there. Another is the rising COVID-19 case in the country. Many provinces there are in the lockdown. So that is also there. And particularly to the biopharma sector, a recent setback has occurred, like FDA has recently rejected one biologics drug developed by Innovent Biologics from China that is in partnership with Eli Lilly on reason that the clinical trial is based only on China. So that is one reason, and that drug has compared efficacy against the chemotherapy, not against the existing standard of care for the disease. So that is the reason, that's why FDA has rejected. So that is a huge setback for the biopharma sector of China. And thus far in this year, China and Hong Kong market has been one of the worst performer this year. So considering all these things, I have not picked any stocks from China pharmaceutical sector, although I am bullish for the long-term perspective, but near-term, you can avoid that sector.
Understood. Thank you very much. We have also seen vaccine makers from South Korea kind of ramping up. And I wonder, is it following the 2 years of the pandemic, are they perhaps late to the party at the moment? What is your view there?
Yeah, they are obviously late in the market, but given the fact that only around 15% of the population in low and middle income countries are vaccinated with the one dose, so there are huge scope of opportunity. And thus far it is clear that all the vaccines which is already in the market, their efficacy are fading off within few months, maybe 3 months, 4 months, 6 months, but that is fading. So you need to be booster doses there. And also we think that the pandemic will be with us, that the virus will be with us, and so we will need regular booster doses, like already FDA has approved or considering to approve the 4th booster doses for this reason. So definitely more vaccines players will be there, and obviously Moderna and Pfizer will be the early mover advantage. They will get the more advantage, but these South Korean companies, they will also, there are more space for new entrants in the market. So some China companies, they are also developing mRNA-based vaccines, as well as South Korea markets. They are also in the vaccine makers. Maybe by the year end, we will see one vaccine from SK Bioscience. So that is the front runner in South Korea market. So definitely the scope is there for the vaccine makers.
Understood. Thank you for that. So one to watch then. Some of the companies that you included in your topics are in the business of medical equipment. Have you observed any difficulties related to the supply chain crunch that we have seen in the past few years?
Yeah, like Olympus I have discussed, they have also said that the semiconductor shortage, that is global shortage is there. So that is one item on the supply side constraint for the entire medical devices industry, not only for this company. That is one industry specific shortage is occurring for the supply side. Semiconductor shortage is there, but that is only near term overhang. But most of the companies have enough stocks or inventories, and since medical is definitely an emergency situation or important, very important situation or parameters, so definitely that shortage will be overcome, and it will not impact that much or very much on the near long-term growth prospect of this company.
Got it. Thank you very much. And finally, your topics are, of course, spread out over a number of sectors. So if you had to pick one sector that you are particularly bullish about, which one would it be?
It's a very tough question. It's very difficult to answer.
Asking the difficult questions here at Smartkarma.
Yeah, but I will go for definitely medtech sector. So that will see, that has seen the worst effect of pandemic, and that will be the most recovery driven sector. Worldwide scope is there. Many elective surgeries have been deferred. Those are not lost, that have been only deferred. But how can one defer the elective surgery by how much? Definitely that have to be come back. So huge recovery prospect is there for the medtech sector, especially those are driven by the elective categories. So medtech is the best sector.
And there you have it. Well, thank you very much for your time today, Tina. Thank you all for attending. If you want to engage Tina for bespoke research requests, you can contact your Smartkarma account manager and they will help you out from there. And I would also recommend following Tina's profile on Smartkarma so you don't miss any of her insights. If you have any questions that you wish to share, you can email us at research@smartkarma.com and we will make sure to pass them along. Thank you, Tina, very much once again.
Thank you. Thanks all.
Goodbye, everyone.